What's going on, guys? It's Jimmy here. We got some major news here as a new bill proposes eliminating Social Security's most hated tax. Does it have legs? This would actually be a raise for tens of millions of Americans by eliminating Social Security taxes. This comes as millions and millions of people are paying more Social Security taxes as more and more people are falling under the rules of Social Security taxes. If you don't know this, people do pay Social Security taxes, and more people are falling under the Social Security taxes. I'll get to that here in a second here. This comes as more Americans say they can never retire. Never retire. Check this out. Yeah, a growing share of working Americans don't think they will ever be able to retire, according to recent surveys. Retirement is a time-honored life stage and a near universal expectation after working a lifetime in America. Yet a comfortable retirement requires savings, and many workers fear they just don't have enough. In a July poll conducted jointly by Axios and Ipsos, 29% of workers under the age of 55 answered a retirement query with, "I don't think I will ever retire." When asked why not, 3/4 of the never retire group said they could not afford to stop working. I actually think a lot more people feel that way. A smaller share said they didn't want to, but I feel like they can't. Let me know your thoughts in the comments. Quote, "How to make the dollar and cents of retirement work is a constant balancing act for those who are retired and Americans hoping to reach that milestone one day." Another survey from the Employee Benefit Research Institute found that 1/3 of workers now expect to retire at 70 years old or later or never. A third report from the Transamerica Center for Retirement Studies found that 40% of Gen X workers and nearly half of boomers expect to retire after 70 or not at all. So we're seeing basically a similar trend here. In the EBRI survey, the share of workers planning to delay retirements rose to 33% in 2023, up from 29% in 2022 and 26% in 2021. This might seem odd at an odd moment to feel short of retirement, as nearly 3/4 of all 401k money sits in stock, and the stock market is booming here lately. We are getting close back to an all-time high. We are near or at about a 1-year high for the stock market, but we're also at an inflation high or near an inflation high for recent years. But I think the biggest problem is that about 2/3 of Americans live paycheck to paycheck, and that is a significant problem. And what ends up happening is a lot of people work their whole lives, and because they work paycheck to paycheck and don't really save anything, they rely on Social Security. One of the other big problems is that because of wage inflation, more and more people are falling under the taxation rules of Social Security. So once you hit a certain threshold, which has not been changed for many years, more and more people are actually being taxed on their Social Security earnings. Also, in addition to this, for the 2022 tax year, there are 11 states that have state taxes on Social Security benefits. Colorado, Connecticut, Kansas, Minnesota, Missouri, Montana, Nebraska, New Mexico, Rhode Island, Utah, and Vermont that charge state taxes on Social Security in addition. And as each COLA raise for Social Security continues to go up and up and up, Social Security benefits keep trickling up and up and up, basically inflation. a lot more people keep starting to get hit by the Social Security taxes. More and more people start to get hit by Social Security taxes. So this new bill being proposed by Congress would eliminate Social Security's most hated tax. Does it have legs? Every year, between 80 and 90% of retirees are reliant on their Social Security income to cover some or all of their expenses. The taxation on Social Security benefits was introduced 40 years ago and is an almost universally despised law. For the past 22 years, National Pollster Gallup has surveyed retirees to gauge their reliance on the income they receive from Social Security. Without fail, between 80 and 90% of respondents every year lean on their Social Security check to cover some portion or all of their expenses. Ensuring the financial health of Social Security is of paramount importance to more than 49 million current retired workers, as well as over 100 million working Americans who will one day claim Social Security, hopefully. For some on Capitol Hill, this means a complete overhaul of the program. Prior to being elected, President Joe Biden released a 4-point plan that outlined major changes to Social Security, including a reinstatement of the payroll tax on high-income earners earning over $400,000, as well as an assortment of changes designed to increase payouts for lifetime low-earning workers, aged beneficiaries. However, Republicans have not allowed him to pass this yet. Other lawmakers believe it is best to improve Social Security is to tackle its individual shortcomings head on. That is exactly what House Representative Thomas Massie, Republican from Kentucky, aims to do with a recently reintroduced bill. This bill would put an end to Social Security's most hated tax. Congressman Massie and more than 24 co-sponsors reintroduced the Senior Citizens Tax Elimination Act, H.R. 3206, which would eliminate the federal government's ability to tax Social Security benefits. To stem all misconceptions, Social Security is taxable at the federal level. A lot of people think that it isn't, but it is. It's actually taxable in 12 states, depending on how much an individual or couple earns and is paid from Social Security. Back in 1983, when Social Security asset reserves, its excess cash buildup since inceptions were running on veritable fumes, Congress passed and then Ronald Reagan signed into law the last major overhaul of the Social Security program. See, that was in 1983, and it's still been running out of money. Had Congress failed to take action, sweeping benefits cuts would have almost certainly been necessary to sustain payouts. The amendments of 1983 introduced a number of permanent changes, including a gradual increase of the full retirement age from 65 to 67, a modest but gradual boost to the payroll tax rate, and the taxation of benefits, which took effect in 1984. If an individual's provisional income, gross income, plus tax-free interest, plus 1/2 of Social Security benefits, surpasses $25,000, which today is not that much money, up to half of their benefits became taxable at the federal rate. For couples, this figure stood at $32,000. Back then, in 1984, $25,000 and $32,000 was a lot of money. But remember, nowadays, for a full-time working individual, the average wage, it can vary per state here, but it's in the $50,000 range, depending on the state. In New York, it's actually $74,000. But you can see here the different wages. I know overall for the whole country it's in the $50,000 range, which is 20 some dollars an hour. You can see here, New York, obviously much, and that's dominated by New York City because there's so many people that live there. But you get the idea, right? That's for a full-time working individual working, for the whole year, right? Now, what's interesting here is this is not adjusted for inflation. So as the years continue to roll by, more and more people will be hitting this number and will be required to pay taxes. Yeah, and that is why more and more people are starting to get hit by this number. So remember here that $25,000 for an individual right now is, you see here, divided by 12, is $2,083 a month. And for couples, $32,000 divided by 12 is $2,600 a month. So remember that it might sound like a lot monthly maybe, but this is like half of the average worker makes nowadays. In 1993, a second tier of taxation was added by the Clinton administration that allowed up to 85% of Social Security benefits to become taxable at the federal rate if an individual or a couple's provisional income topped $34,000 or $44,000 respectively. Again, talk to somebody that knows taxes, or you can look this up, or an accountant or somebody like that if you don't know about this, right? An informal poll conducted by the Senior Citizens League found out that out of almost 5,000 votes cast to the question, should Social Security income be taxed, 94% had chosen no, not at all. So this bill now introduced in Congress would eliminate that. So let me know your thoughts here in the comments. I will keep you up to date here on this. And if you haven't yet, make sure to click the subscribe button down below and the bell icon so you don't miss out on any new videos. It's completely free to do so. New videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. And I will keep you up to date here on everything going on here on a daily basis that you need to know about. Also, thanks for liking, and please share this video with anybody that needs to hear this information. Click here to see a shocking video about U.S. boots on the ground in Ukraine. Or click here to see a new wave of inflation that most Americans don't know about. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.